Welcome to Pressure Points. Our topic is Tesla's September earnings. And as of this recording, shares are down just under 4% in after hours trading. They entered the earnings call down just under 2%. So think of it as during the call, they traded off about 2%. Now, there's many topics I want to go through, and I'm going to start with the pressure point, which is the reason why I think that the stock is down, is related to the updated timing in terms of when the drivers are going to be taking out of the cars in Austin. It may seem like it is an obscure data point, but keep in mind, Tesla stock is up 35% over the past 3 months. The Nasdaq's up 9%. That expansion of market cap is built on investors getting increasingly optimistic about the size and the pace that they are going to be capitalizing on the robotaxi fleet, FSD, and to a lesser extent, Optimus. And so any sort of little tweaks into how that the timing of getting to that future can have an impact on the stock in the near term. And so specifically what was said, this is on the first question on the call, was related to the timing of when the drivers will be removed from Austin. Austin, of course, is their first robotaxi market. We haven't had many updates over the past few months on that. And Elon mentioned that by the end of the year, there will be some pockets of Austin that will not have drivers in it. And that may come across as a disappointment for some investors who were hoping that they weren't going to have drivers 2 months ago. And so the reality is that the reason why they're going to keep these drivers around, at least in some parts, is because safety is paramount. And Elon talked about this. I absolutely agree that if they have any sort of mess up, it is going to cause some significant brand damage, impact to consumer confidence, and therefore they just can't risk that. And so, well, it may be a little bit of a disappointment today. I think that the reality is it's absolutely the right call down the road. There were some positive updates related to robotaxi. They talked about adding 8 to 10 new cities by the end of this year. Of course, they'll be very small, but 8 to 10 new cities. Previously, all they said was 20 to 23 by the end of 26. So that's a little bit of a clarity in terms of updated timing. And as far as production of the Cybercab, they said that's in Q2. Previously, they had said sometime in 2026. So it is in line with that, but a little bit earlier than what I thought. When they say 2026 before, I assume it's at the very end of 26, but Q2 would be a little bit earlier, and kind of ramping and volume production, they said, hope at the end of 26. And so that's a positive sign in terms of how they feel more broadly about the robotaxi rollout. They're adding cities, they're ramping production of the Cybercab, which they'll be taking most of that production for their own fleet initially. So I think that in aggregate, that was the pressure point and that timing of the drivers. But I think if you take a step back, it's reasonable that they're doing that. And they're also signaling that they are increasingly confident in terms of the bigger picture opportunity on robotaxi. So I'm just going to look at my notes here and check off some other kind of important pieces. One, this is now we're moving beyond the pressure point. The question about the more affordable model, I'll just cut right to the chase. It's the cheaper Model Y and Model 3. That was most people's suspicion going into this call. There's a little bit of a hope that that wasn't going to be the case, that they would surprise us, but here we are. Those are the two, in fact, more affordable vehicles. Deliveries for next year. Now, we didn't get much on this. Elon did talk about over the next 24 months wanting to increase production as fast as they can, but that doesn't really help us get a sense about what deliveries are going to be next year. They gave the standard language around the broader economic environment. The street is in print at plus 17% growth. The whisper number is plus 10%. My thinking is it's probably going to be plus 5. I think we are going to grow next year, but I don't think it's going to be meaningful. We didn't get surprised by a new, more affordable model that was going to ramp earlier in the year that could get to that 17%. I suspect that the street numbers on deliveries are going to come down. Doesn't really matter to the stock, but just as a housekeeping item, the delivery outlook for next year is probably going to be more modest than what the street is modeling in. And two other topics, one in terms of margins. So the automotive gross margins ex credits, 15.4%. That was below the street at 15.6, but It was a sequential improvement from 15 in the June quarter. It was 12.5 in the March quarter. So 12.5 to 15, 15.4. It's moving in the right direction. And given the more affordable model is in fact the Model Y and Model 3, I suspect that margins are going to kind of remain in this level through the 2026. So, which gets to the cash piece, which continues to expand in a positive related. They've got 41 billion in cash right now. That's up 400 million quarter on quarter. It's a lot of cash and equivalents. That's about double, not quite double. Ford and GM have about 25 billion each, but they've got a lot of cash, a lot more cash than their traditional automotive, and just a DNA for going for innovation too. But that they do have plenty of cash. They've got the margins to support it to continue to go after this ambitious autonomy, these 3 autonomy goals, which leads us to the final point, which is Optimus. Yes, I left it last because it is the furthest opportunity out there. Previously, I had said 1 million units in 5 years. He talked about, we got a little bit more clarity. We're going to have Optimus 3 shown for the first time in February, March. And hopefully, it was his words, in production by the end of the year. He also talked about Optimus 4 selling 10 million units, no time frame, and Optimus 5 50 to 100 million units. Numbers get kind of goofy. Let's try to put some sensibility around this and just say they do 5 million units a year. If they're doing 5 million units a year at $25,000 each, that's about 125 billion in revenue. That effectively double the business where it's at today. Of course, it's going to be a decade plus. I mean, they're not doing 5 million cars a year. They're doing 2 million cars a year. It's going to be a long time before they're doing 5 million Optimus a year. So still not worth putting too much into the model, but still definitely worth owning the stock for that, if that makes any sense, because I think it still represents some nice optionality. On behalf of Pressure Points, I'm Gene. Bye for now.